Hello and welcome. You're watching a fresh and new edition of Market Masterclass on Money9. I'm Sakshi Batra. This is a show where market veterans join in to share key insights on how should investors be approaching the markets currently. And joining in on this special edition is a very special guest. Joining me is Mr. Sudeep Bandopadhyay, Group Chairman, Indie Trade Capital. Sudeep sir, thank you so much. It's been a pleasure to speak to you in the past, and this is your first interview with us on Money9. Appreciate you joining in.
Thank you. Thank you very much, Sakshi.
So thank you. Let me just first begin by understanding and asking about your assessment of the current market climate as things have turned really volatile, be it globally and locally. So how are you looking at the markets currently?
Well, Sakshi, I think, global factors are playing a significant role in today's emerging markets, including India. If you look at the global appetite for risk, which has suddenly kind of come down a bit, this is on the back of the fact that US bond yields have gone up and also the coronavirus cases have gone up. I think these two are playing in the minds of the investors, and their risk appetite is a bit down. There is also a bit of a profit booking and all kind of adjustments because of the year end which is happening. This all has led to a significant volatility in the short term and some bit of correction from the highs we have seen earlier. Now, having said that, I think we strongly believe that the positive bias of the market continues. Structurally, we are in a good phase. There is enough and more liquidity in the global markets, and that will continue to support markets like India. So, if you are looking at medium to long term, I think we are very bullish. We believe that investors should start building their portfolio. If they have missed an opportunity earlier, probably this is the time for them to start buying into good stocks.
Okay, but I also wanted to ask you, how are you looking at this threat of second wave of COVID-19? Is it going to pose any kind of threat to the current market scenario?
Well, unfortunately, there is, of course, a perceived, downside to the market. There is a worry. Now, I will take you, Sakshi, back to last March, part of April, when the COVID first hit us. There was a complete mayhem. The markets corrected significantly, but then gradually market from the lower level started going up, and we have seen one of the the most impressive rallies in capital markets globally, including India. So if you remember that lesson, if we remember that lesson, I think we have, as a long term investor, we have to look through this panic, we have to look through this worry. We know COVID is kind of going to go. There is a vaccine, there are multiple vaccines, people are getting vaccinated. It's just a matter of time, maybe 2 months, maybe 3 months, maybe 4 months. So if somebody is looking at investing in the markets for long term, and which is what I strongly believe they should, considering the factors which are all around us, I think I will still maintain my view that this is a great time to start buying stocks, or if you have already bought, maybe buy some more.
Okay, some buy some more. That's the word that we are getting. And most of the first time investors who are perhaps sitting still on the sidelines, thinking that the markets have run up too much and these bouts of volatility that we are seeing, they're just waiting for some more correction to be able to catch the bottom. So, what would you advise to them?
Well, Sakshi, my advice to them would be, in market, you have to enter sometime. And this correction, a few weeks back, the market was at a all-time high. Now this correction has given an excellent opportunity for all of you to enter. Now, I'm not saying you enter into random companies or random scripts. You pick up sectors and shares which have got long term potential, which are backed by strong management, and which have been performing very well. So I can talk of few sectors like construction, infrastructure, where the government is going to spend significant amount of money over the next few years under its NIP plan. I can talk about financial services. There has been significant correction. Now, any estimate you pick up, I think we are talking about 10% plus GDP growth in the next fiscal. If that's going to happen, and I'm confident that will happen, everybody is confident that will happen, then the financial services companies, or at least the good quality financial services businesses, will grow 2x of that at the minimum. Now, if you pick up some of the good frontline financial services companies with good management, good credibility, you can't go wrong. There are few sectors which are undergoing re-rating. Pharma is one, IT is one. Again, you can selectively enter these sectors and build your portfolio.
Right. And you have talked about all of these important sectors that the investors can definitely look at with creating a portfolio today. So, taking that point forward, if someone were to create a portfolio for long term today, what's the kind of diversification that you would advise to them? And, what are the things that you're putting in that diversification basket today?
Well, I think I already talked about the diversification. You look at infrastructure construction. So that has to be there. That plays on the India growth story. And remember, the private sector capital expenditure is still at its nascent stage. So the government is going to spend and is committed to spend significant amount of money. That money will go to construction, roads, ports, airports, housing for all. So there is a significant emphasis on construction and infrastructure activities. So pick up maybe one of the best infrastructure and construction companies, which is Larsen to Grow. It's available at a decent valuation. All the factors which were kind of plaguing it are a thing of the past. Even the Middle East hydrocarbon spend is going to go up based on global oil prices going up. So it's rightly positioned. Maybe investors should look at picking up. It's a fantastic company, great management, great credibility. You can pick that up. Look at financial services sector I talked about. I think State Bank of India, crown jewel in the PSU basket, it's corrected from its highs. And considering the way the economy is moving, considering the way the old problem of asset quality is coming back to help them, there are recoveries which have started happening, and that pace will get kind of accelerated going forward through the NCLT process will help them. The subsidiaries of State Bank are performing exceedingly well. The company bank is well capitalized, and through strategic divestment of stakes in subsidiaries, it is garnering further capital. It doesn't need to come to the market in the next couple of years, maybe. So again, excellent buy at current levels. Look at the private sector banking
Absolutely.
giant corrected. It's a great place to buy that.
Okay, I'm glad that you've simplified it so much for all our viewers to understand, how should they be looking at creating this diversified portfolio in the current market space. We are also seeing this whole theme of value buying come up. If you can help our viewers understand, should they be going for this kind of a thematic approach towards the markets? Should they be looking at a bottom-up approach and getting these kind of stocks also in their basket?
Well, absolutely. I think I'm not a believer in top-down approach. I'm definitely not a believer in the buying the index at this stage. I think what you should do and what I've been explaining is that they have to pick up the right sector and a right company in that sector and go and buy that. Now, value, of course, plays a very, very important role. If you have been having this conversation 3 weeks back, many of these scripts I'm talking about were quoting at a significantly higher level. So the prices of these stocks have come down with this bout of correction, and now they are looking very, very attractive at the kind of value it is available. Now, of course, you always will want to pick up at the probably the lowest levels, but that's not feasible. So you don't know if you're an investor, you don't know whether the next few days the price will correct even further or not. But if you're a long-term investor, you have to start entering the market somewhere. Maybe you buy a bit slowly. If you picked up a script that you want to buy Larsen, don't put all your money which you intend to put in Larsen on day one. Maybe buy slowly, buy over maybe 1 week. Yes, yeah, the price may go up a bit, but price may come down also a bit. So try and buy slowly. That's my advice. And always look at value and value buying.
Right. Now, before I go, let you go, I have to ask you one last question. I'm not too sure of how big a fan of you are you of the IPOs that are hitting the markets right now. But there is this whole interest in this retail investor sphere that they are looking at, and they are flocking across all IPOs that have hit the markets right now, as far as the subscription numbers are indicating. But what would you advise to investors who are just looking at, say, listing gains?
Well, I think I believe that's a kind of a risky game. A lot of these IPOs, why lot? Most of these IPOs are coming at a valuation which is close to full. Now, if you are buying something at close to full valuation, the chances are that you may get hit. That's what has been happening in the last 1.5 weeks. The IPOs which are getting listed are not getting listing gain; they are actually on the negative. So you have to be careful, particularly considering the fact that the valuations of most of these IPOs are looking a bit stretched. Now, if you're a long-term investor, you're not looking at listing gains, then maybe some of these IPOs can be appealing to you, and you can always apply and try and get an allotment. But if you are trying to kind of work on the listing gain, I think it's a very, very risky endeavor. I won't advise that course of action to a general small retail investor. If you're an expert, if you are a HNI, maybe you can play that game.
Okay, thank you very much, Mr. Bandyopadhyay, for joining us on this special edition of Market Masterclass and explaining to all our viewers the entire idea of how should they be really approaching the current markets, both secondary and the primary market as well. It's been a pleasure speaking to you, as is always, and hope to get many more interactions going with you on Market Masterclass. Thank you very much for joining in.
Thank you, Sakshi. Thank you very much.
Okay, so that was Mr. Bandyopadhyay sharing with us all his key insights on how should you be really approaching the markets. I'm sure you would have noted down all the diversified names that he took from the markets currently and how should you get started with a wealth generating portfolio. With that, we wrap up this edition of Market Masterclass. Many thanks for joining in.